Today, we are going to be looking at what happens after the market has trended. If you are aware from yesterday, or rather from last week, where we had the CPI data last week created this massive bearish move on the EURUSD, and then it led to a serious down wave, a downtrend. Now, with this downtrend, with this wave that we have over here, as you can see, you will be expecting most times that the market is going to go into a state of equilibrium, consolidation, ranging. And that's exactly what is happening here, right? And this is a normal thing that happens most times after we have a serious move in the market, whether it's a bullish move or it's a bearish move. Now, as you can see right in front of us, here was the sideways market right from the beginning of this week, Monday, and then today is Tuesday. But then with this bearish move, you'll be expecting the ranging, and then you would expect either a breakout of that range. And that's why if you understand the different phases of the market, you'll know more or less what is coming up, whether the market is going to range, whether it's going to trend. The only question now is, when it ranges after a trending move, is it now going to continue in that direction of the trend, or is it going to pull back? Because if you are a trend trader, based on what we have in front of us, you'll be expecting a pullback to this area or a pullback to this area in order to what? In order to follow through with this particular wave, with this particular downtrend. Or the market could as well break the lows of this range and then continue to drop lower, and then you could expect this area to now act as resistance and then to continue with the trend move, the bearish trend move as well. And if you're a counter trend trader, in this range that we have over here, this is where you'll be expecting the market to push higher, because a counter trend trader usually goes against the trend. So whatever the case might be, whether you're a trend trader or a counter trend trader, you need to understand what happens after a trending move. What happens after a bearish trend has occurred, or what happens after a bullish trend has occurred. And in this video, we have just shown you what is happening right now. And of course, the only thing we could have is if there is high impact news. But then if you check the calendar, there is no high impact news around the corner. Today is Wednesday, if you remember, as I just said. But if you check the calendar, there is no high impact news that can cause that volatility. Today is Wednesday. You can see Wednesday is dry. We already had the news come out for pounds earlier, and another one for pounds at about 5 p.m. UK time. And that is the Bank of England Governor Bailey will be giving a speech. And then Thursday for the USD, since it's EURUSD we're talking about, we're either looking for high impact news for euros or for USD. And then tomorrow, we just have the unemployment claims. Let's see whether this might be the high impact news that can introduce volatility to the market, that can now make it to push higher or lower, whether to continue to range as well. It all depends. And then Friday, you don't have anything for euros or USD. So the market could as well also range throughout this week. There is a possibility that the market could as well range as well throughout this week. So with that said, this is just a quick video just to explain to you what happens after the market has trended downwards or upwards. Market moves up, down, and sideways. You have a massive down move. The next thing you should be expecting, most times than not, is a sideways market. And after the sideways market, you could either move up as a pullback or down out of the consolidation as a continuous move. With that said, I want to say thank you to you guys. If the video was helpful, give it a thumbs up, share the link, and of course, hit the subscribe button and get notifications when we drop more videos like this. Thank you guys. Enjoy the rest of the day and goodbye for now. Cheers.